Good morning. Here we are. We have more red in the markets. Oh boy, it's getting dicey out there. We have news from CPI. There is inflation. I mean, they told us that there wasn't inflation. This is really weird, but I'm a little confused. So let's get into it a little bit and see where we go. So I thought there was not any inflation. I'm kind of confused this morning, and now they're telling me that it looks like we have inflation that is matching levels that we haven't seen since 2008. So This is weird. I pulled out a bottle of booze yesterday in the morning, and my favorite EM comment of all time came in. It said, "There's so much red out there, so much red," and Mo's dumbass is smiling and yipping it up. So for that person, I brought more booze today. This is Buffalo Trace whiskey, and let's celebrate a little bit. So, all right, let's get into it. Nasdaq's down 1%, S&P is down a little over 0.5%, Dow is down almost the 1%. I was not going to lead with oh, hold on one second. Let me get rid of. Whoops. I have so many charts on my screen right now. Goodness gracious. Where are we at here? X out of that. Okay. Oh, let's start with the CPI. I was not planning on leading with CPI, and then it came out, and I was like, oh boy, here we go. So, inflation has accelerated at its fastest pace in more than 12 years. So, CPI is up it rose 4.2% from a year ago. Guys, I said that we need to pay attention to this yesterday, and here it is. The number is nuts, and when you start breaking it down into individual things, I mean, energy prices have jumped up 25% from a year ago. Let's call it a 50% increase in gasoline. 37% increase in fuel oil. The used car and truck sales have surged 21%. I mean, I think it's really funny. The other day I was driving around. This was right after the first round of stimulus checks came out from the latest bill, the latest $1.9 trillion bill. The amount of cars that I saw that were hold on a second. Okay. The amount of cars that I saw that were had new tags on them was truly incredible. It was really something. So people are taking their money and it's hard to find cars out there. It's hard to find used cars. Lumber prices alone have risen 124% in 2021. Copper has jumped 36%. And here we go. Still, the Fed repeatedly has said that we are not going to raise rates or pull back on monthly bond purchases until inflation averages around 2% for an extended period. I don't know how they're going to, I mean, guys, the more this kind of data comes out, the more I do not think that they're going to wait until the end of 2023 to do something. It's just, I wasn't going to do this story right now, but let's just do it anyways. Right here. Beware the heightened risks of fragility on the market. Bottom line, this is what it comes down to. Fragility risks in the market are at its highest ever as investors keep looking to the Federal Reserve to extend a massive rally. So you are looking at the Fed basically they're saying that the Fed is controlling this market. Markets remain overly dependent on the Fed and inherently fragile. Bottom line, only reason that I pulled out this story, those that make you can break you. If the Fed can make this market, they can break this market. When you have people that come into the media, the powers that be, whatever, make that person, they can take them down. Anything in life, whoever makes you can definitely break you. That's why it's better to do it on your own. So as the Fed has made this market, they're gonna have to figure out how to not break it. That is on them. So let's get into a little bit more of this job stuff because this is all tied together. Missouri and Tennessee join the states cutting pandemic payments. Here we go. So Missouri and Tennessee have decided to end all federally funded pandemic-related unemployment benefits this summer, saying that the extra money is keeping those out of work from rejoining the labor force. So this is up to 5 states now. While these benefits provided supplementary financial assistance during the height of the COVID-19 pandemic, which was the idea of it, help people when they are actually in need. They were intended to be temporary, and now we are trying to make them, we're running them through September of this year. So, Arkansas, Mississippi, Montana are the ones that, Arkansas, Mississippi, and Alabama are going to be joining. And this is a great line. Cutting pandemic benefits now, as some states have done or are considering doing, it will not just hurt workers who are depending on federal benefits while they cannot find work or unable to work. It will also drag on the economy, and as those benefits are supporting spending. So we're supporting spending with printed money. Come on. What is this? These economists and these think tank people, get real with yourself. And I don't really know the numbers. I haven't really been paying attention to them, but we're really going back to these things about the deaths that are being created as all 7 states ending the pandemic benefits for workers have vaccination rates below the national average. All also have below 7-day average for new cases. So, I mean, they're trying to use every excuse in the book that they can use. Let's go to Chipotle. This is just another thing that goes to it. They're having work shortages, so they're increasing their hourly wages to $15 an hour. Another point that I'd like to make: if you let the private sector do its thing, nobody's forcing Chipotle to raise their minimum wage. Walmart's already done it. Target's already done it. Costco has been doing it since 2011, 2012, and here comes Chipotle. So there don't need to be rules about minimum wage. You let these companies figure it out for themselves. So the company's also offering employee referrals. I mean, they're giving incentives, and they're looking to fill 20,000 jobs, which is incredible. So good job, Chipotle. What do we got here? And here there's the mention of it. This raises a bigger question as demand is surging, and some people have left the industry or are on the sidelines, given that the current federal unemployment supplements run out in December. So people are sitting on the sidelines because they're making more money at home. So, yep, if you can get a job, I say go get a job. But what the heck do I know? Okay. This is an interesting one that I pulled yesterday. I actually sent it to Paul. Cleveland Fed, that's why I pulled it. I can't remember her name. What's her name? Loretta Mester. She is saying that there is a bright economic outlook with the risk of inflation. So, excuse me. The Cleveland Fed chief said that the Fed should continue to keep short-term interest rates near zero and maintain quantitative easing. What am I trying to say here? Just keep printing money. Doesn't matter. Just keep printing money. It'll be okay. The Fed has said it will continue those asset purchases until the economy looks like it has made substantial further progress towards its goals of maximum employment and stable prices, and there is an upside risk of inflation. Oh, good God. I just can't. I mean, I can totally believe it, but we have gotten to the point where the Fed is controlling the market, and everybody's just okay with it. Nobody says anything. I figured out how to add comments today, so I started adding comments. She said that her expectation is at the end of 2021, inflation will get to 2%. I don't know, Ms. Mester, but that CPI number wasn't too good, so you might be wrong about that one. This is a great line. Mester says she sees some upward valuation pressure in the stock market, but she does not currently see an elevated risk in the overall financial system. That's cool. And right here, that's why literally when anybody says the word inflation, the market just collapses on you. Smash the like button for me, guys. The like button the market just crashes. Any word of inflation, any word of increasing rates, guys, the volatility in this market is real. And these people, if they're saying that there is just some risk, this and that, we don't see any risk. Come on. There's some parts of the economy that are still weak, sure. And then we come. And all of a sudden, you haven't heard this in a couple of weeks. Nobody has said anything. And then the reason for the jobs number being missed in April is noting that the vaccination rates are not high enough to alleviate fears of going back to the workplace. And here we come with the excuses. Whatever they can say just to get rid of the excuses. And then we go into saying that the unemployment benefits, I don't think that's the main issue. Yeah, that's why you had literally 266 out of a million projected jobs created in April. These people are out of their minds. If anybody buys this baloney that they share, I own a piece of what's a big building? The Empire State Building, and I'm willing to sell it to you. I'll sell you 25% of it. Here we go. Here's our girl. Reuters. David Randall wrote this. Ark's Cathy Wood predicts a serious correction in commodities. It's funny that she can predict a serious correction in commodities, but she won't predict a serious correction in growth stocks and hype stocks and anything that she's invested in. But when it's going against her, sure, we can predict We could predict a serious correction there because commodities have just become so wildly overvalued in the last 2 to 3 months. This is just, I don't know how we're going to live with this. The sell-off in high-growth stocks since the beginning of the year does not signal the end of the tech rally that began during the coronavirus pandemic in 2020, said Cathy Wood of Ark Investments. And Ark Investments is just crushing it this year. They're doing a great job. I think they're up 50%, this and that. So we'll see. We'll get later. The scramble is more, this is good. The scramble is more today than what we've seen in other cycles, Cathy Wood said, predicting that we will have a very serious correction in commodity prices once the global economy fully reopens. Okay. We're going to have deflation rather than inflation. That will likely be the dominant theme in the global markets in the years ahead due to the technology innovation. Aw, that's so cute. This lady is just so adorable. Many have considered what has happened in the last 3 months to be the equivalent of the tech and the telecom bust. We do not believe that is the case. Yeah, because you're a little cheerleader. That's what you are. Oh, the fund is down 14.7% from the start of the year and 31.5% in the last 3 months. Oh my God. I thought she was up 50%. Well, damn. Investors pulled nearly $714 million out of Ark in the week that ended in May 5th. Oh my God. Okay, well, she said, go ahead and buy the dip. Here it is, buy the dip. If I loved it up there, then 35% less expensive must be a steal. Go get them, Cathy. Have fun with yourself. And you and all the other little minions will get destroyed, and then you'll go ahead and blame everybody that you can possibly blame, and then we'll go from there. Oh, there's my underrated brachialis. Hello there. All right, guys. So I put this together last night. I was thinking back, and I was thinking, what exactly has happened in the past? Yeah, she is still up, but yeah, it's okay. All right. So I was thinking, what has happened in the last 15 months since the height of the market back in February of 2020, and then everything that happened since. So I kind of went through last night and started looking at what the narratives of the market were at the time. And then I started looking at what the 10-year yield rates were at the time and kind of what took us to what point. And you can kind of see this chart is the big tech sector. So XLK, if you want to look at it, S&P 500, big tech sector. So let's see what happens. So in February 19th, 2020, this was the peak. This was right before we got the all of this. So coronavirus was kind of out there, and then the fall started to happen, and that's when we started that decline into this March 23rd. So you had big tech growth, you had high rates, and then you had a pandemic, and of course this was growth and tech that got you to this point. Then you had the pandemic come in. You had high interest rates. You had everything, job loss. You had everybody shutting you down. Everybody this and this, and here we are. And they dropped. The yields dropped. We hit the bottom of the market on March 23rd, and then this insane recovery started to happen. So even as the interest rates continued to drop. The yields continue to drop. The interest rates, the Fed set at 0. This is when we started doing all of these CARES Act and this act and that act. And over this time period, we printed over $12 trillion of printed money. And of course, somewhere in that, the Project Warp Speed and the headlines started with Pfizer and Moderna and this and that. So you had this phenomenal rally taking you up to new highs in the market, which is just, my goodness. I mean, I still look at this, and remember, this is the big tech. I still look at this, and I just can't get over the fact that this actually happened. It just when you zoom out at this level and just look at it, it's really incredible. So at this point, rates began to creep up a little bit on you, and you can see that we started falling just a touch. And here on October 30th, I mean, they were starting to creep rates. October 30th comes around. High yields and inflation talks begin, that's when you got that. Wait a second. Hold on. Then you kept, okay, so right in here, October 30th, that's when we got rates beginning to creep up on us again. But it was okay because they were still printing money. They were still doing everything that needed to be done to stimulate this economy. March 16th comes. Here we go. That is when all of these inflation talks started to happen. That's when you got this big pullback in the market. You got interest rates starting to creep on us. And you got yield rates starting to creep on us. You guys remember when this happened? I remember when this happened, and it was a 10% pullback, and everybody thought it was the end of the world. And we just kept seeing the yields just going higher and higher and higher. Then something interesting happened. March 5th. This is when, for whatever reason, and I think it's because we kind of hit this support level right here. If you just draw that line right across, that is when we started having the institutional buyers start coming into the market, which is the big banks, the big hedge funds and whatnot, and they started buying at those support levels. We also did another stimulus bill right around this time. Take it to April 1st. April 1st, and you can see right here where it turned green on my chart. That is when we got that crossover happening. So the trend turned positive, okay? And the market slowly started to creep, even with those inflation talks and the yields increasing. So what changed? Right when we started getting that, we started getting this little whisper. It wasn't jumping up and down. It was a little whisper that in the month of April, because we were starting to create those jobs, we were just a little bit of jobs like this. We were starting to get that whisper that April was going to be this boom, 1 million jobs that were going to be created in April, this and that. Then on April 5th, they started to change that narrative. And they started to say, instead of having real inflation, we were going to have temporary inflation. Whatever the hell that means. There might be a definition for temporary inflation, but how are you going to say that you're going to have temporary inflation, especially when you've printed over $12.2 trillion and you just keep giving it away and letting people spend it in this economy and pump things up? It just doesn't work out that way. May 7th. That's when we get this little spike, and here we are the following week. The jobs numbers is incredibly disappointing, and now people start saying, ooh, maybe we're going to have real inflation. This is going to be bad. This is going to be real bad. And then Janet Yellen came out and she said, Janet Yellen's Secretary of the Treasury, she said, maybe we're going to have to actually raise the interest rates to start combating inflation. Now you have the CPI number coming out. So the trend yesterday changed. The trend on Monday changed in the XLK ETF. We turned red. I don't foresee the Fed doing anything different, but I can see it coming back and pulling back to this level. Maybe we're going to get some kind of correction. I don't know what it is right now, what the percentage drop is in XLK right now. But the point is, if you just follow what's happening in the markets, you can actually, it's easy to look back in retrospect, but this just keeps happening over and over. And I could go back to 2008 and break this down the same way. This is all financially engineered, and financial engineering there's a point where I just keep going back to it. Warren Buffett said at his annual meeting, in economics, you do one thing and then you have to say, okay, what's next? There isn't a one fix for everything. Frankly, they've done tons and tons and tons of fixes, and at some point the fix isn't going to work anymore. And they're not going to be able to control institutional money. So here we are. Yeah, they're not going to tell you this on CNBC. God forbid they tell you this on CNBC. My favorite was Steve Leishman on CNBC on Friday. He came out and when the jobs number came out, he goes, "Oh my God, 266,000 jobs. This must be a mistake. Hold on." And they went off of him, and then they went back to him, and he was like, "Okay, it was actually 266,000 jobs." These people are nothing but cheerleaders. They're just people for television. They're there for your entertainment. That's all they are. They don't know. They don't know. Meet Kevin is mad because inflation hurt Tesla. Well, to his credit, they told us there was no inflation. So I still don't believe it. I still don't believe there's inflation. I'm just kidding. Alrighty. Let's see what the market's doing, and then let's see. What do you guys want to talk about? Oh, let's look at the yields. What do we got here? Oh, here we go. 3-month Treasury, almost about to go negative again. Guys, that means that if you buy a 3-month Treasury, you are going to be paying the government to hold your money. So you give them $100,000, you're going to be paying them 1 basis point to, well, if it goes negative, I don't know how a negative will go, but you'll be paying them to hold your money. So that's pretty sweet. Guys, smash the like button for me, and let me show you our Everything Money Patreon page real quick. So with what we have is we have a Patreon, but our Patreon is a little bit different than others because you actually get something for it. You're not just donating money to us hoping that we provide you with content. We're going to provide you with content. We don't need, doesn't matter. If you want our software, our 8-pillar software, our retirement calculator, our real estate calculator, all the software that we're going to come out in the future, $23 a month gets you that software. The only thing that you won't get in here is momentum trading and chart trading. $23 a month, you're locked in forever. And here we go. Next one is the Bid and Ask Nation. This is where you get all access to me. I'm in there pretty much all day, and when I'm not in there, I have little proteges, Nick, Dads with a Purpose, and Simple Living, Cash. They are awesome, and they pretty much handle anything that when I am gone. But $65 a month, guys, this is a steal. I mean, I've had people come in that have no idea what they're doing, and within 2 months, they're making more than $65 a month. I think one of my favorite quotes, one of my favorite testimonials somebody gave me was, they said, I made my month of Patreon in one trade. And somebody came in and said, cool, I just made 10 years of Patreon in one trade. So these are from non-experienced people, and now they're experienced, and just come and learn from me, and you guys will do very well for yourselves. And it's all about chart reading. So let's go to some charts. You guys give me some stocks. I'll look through them. And we'll go from there. Let's see. Paul, should Europeans maybe not invest in the U.S. dollar right now? I mean, the question is for Paul. I know both of us, we don't do anything with currencies. Okay, let's see here. Woot, woot. Join the Bid and Ask Nation. Welcome, welcome, welcome. Don't forget the Tesla giveaway. Oh, I don't know how I could forget the Tesla giveaway. Thank you, Beaker. Guys, we're giving away 2 Teslas. When we hit 50,000 subscribers and 100,000 subscribers, we are giving away 2 Model 3s, and you customize them however you want, up to 38 or 39. There's a stipulation in there. You can't, if you want self-driving and stuff, you got to pay for that yourself. But we're giving away 2 Teslas. You customize the colors how you want, and it's crazy. We go back to, let me go back to the March Madness thing. I think it was CBS Sports. I don't really do the March Madness thing, but they were giving away a Nissan Rogue. CBS Sports was giving away a Nissan Rogue. Everything Money with 36,600 subscribers is giving away 2 Tesla Model S's. So that's awkward for them, not us. All right. Intel. Everybody wants Intel. I have Intel as a value play right now. I do not have it as a trade. Holy moly. Let's take a gander at this. So it's for sure, it's some kind of support level right here. And it's just kind of sitting there. So, yeah, I mean, Intel's a downtrend. It's sitting right at its 200-day moving average. Let's see if it can hold that thing. And, yeah, that's it. That's it. Stay with Intel as long as you can. And if you want to be shorting Intel or something like that, you need to talk to Bogdan. He is the one that he's the shorting king right now. He is the shorting king right now. And guys, if you want to know how to short, I do believe in making money on the way up and on the way down. So probably 2 months ago, 3 months ago, I did a Patreon only for the Bid and Ask Nation, a shorting seminar. And it was only on how to short stocks on a chart, because I wanted to prepare those in the Bid and Ask Nation to know how to short when the time come. And maybe the time's now, maybe it's not. But when the time comes, I want you to be prepared to know how to short instead of trying to learn at the time. That's why Paul and I are teaching options right now. We want to teach you guys to do it now so that when it happens, you can go ahead and get at it. So, did I say Model S? You're not getting a Model S. You're getting a Tesla Model 3. 2 Tesla Model 3s. I do like the Model S, though. All right, let's do eBay because I have a ton of puts on eBay. Interested to see what this chart looks like. I have not looked at it yet. Okay, so this is a great example of, let me zoom in here just because we don't need the rest of this chart for any reason. So eBay did have a little bit of a gap down here on earnings. Okay, no big deal. And the trend was down. The trend is still down. Your red line is still under yellow and you're rebounding in price. So most traders are going to say, oh my God, we got to get out of this. We got to get out of this. I'm losing my ass. Okay, well, I look at it saying, well, your trend is you're still red under yellow. I mean, all this is a snapback. And those of you that know, snapbacks it's the price moving against you and the trend is still going in your favor. So there's no reason to panic. That's a good one. Stay if you're short on eBay, just stay with it until your trend changes. And I'm sure as tech falls, something's going to happen in this where it's going to get a little drop. Yesterday it was down 1.2%. So it's not immune to the market. It doesn't have relative strength like I was talking about yesterday on the live stream. All right. I want a Tesla Roadster. Well, just stick with the EM and you'll be able to afford one day. 250 G's for that bad boy. And I don't know are they ever going to come out with one or did they send the only one to Mars? I think that's all they did. Oh, Plug Power. That was in the news yesterday. Somebody said, I read an article that said, if you are a chartist, it's time to exit Plug Power. Well, that's really funny because I look at Plug Power and I go, ooh, I'm starting to like what this trend is doing. This might be Tracker Share City because I could get this and we're starting to get our red line to kind of move up, yellow line to kind of drop below. This is why people don't understand charts in the slightest. If we can just get this trend moving towards 32%, this thing can definitely have some kind of recovery. The only issue that I do see is that it's under all 4 of its major moving averages. That's just going to take a lot of volume. You're going to need multiple days like this green bar to really push through these moving averages. But once you get through the 200-day moving average, you're Gucci. And that is why people don't understand charts, because this thing is, hey, Nick or Cash, if you're watching right now, please throw this in the Discord, and I might put it on my watch list. So, and you know what, guys? This is what I love. This is why dog stocks work, and I teach you about so much about dog stocks. And smash the like button for me in this last minute. The reason that I love dog stocks is because people will look at something like this, and they'll say, this thing is over. This thing is over, and everybody will just start ignoring Plug Power, for example. We're going to be the first ones to get into it. Right when it crosses over that 32%, we're going to be the first ones to get into it. And then all the institutions, all the minions start saying, ooh, Plug Power, let's go grab it. They go and grab it, and boom, there you go. And we can maybe ride this thing back up. I don't know if it's capable, but I could see this thing going up to $50 low side, 75 high side. So with dog stocks, we want to be the first ones in, and that will be wonderful. The NASDAQ is plummeting. Let's take a look at what the NASDAQ's doing. We have 5 seconds before the market opens, and we open. Let's see what's happening. Let me pull up my trusty Schwab, and it's not that trusty because it's not updating for me. Let's see what we got. NASDAQ futures are what? Yep, I guess I should put the cap back on my whiskey. Let's see. Oh, Tesla's not in the news today? In the top 5? That's sad. Oh, okay. They're down 2.5%. Sweet. What's your take on the super commodity cycle? I mean, it's just like every other cycle. It's probably a little bit inflated. Well, it's definitely inflated. And the pullback is going to be what it is. I think that commodities were underpriced for a long time. So I think they'll come back to normal, just like everything else. But no big deal. I will do CVX And then I'm going to get out of here because I have a lot of stuff to do today. But I will see you guys tomorrow morning, and I can't wait. I love this morning show. I was telling Paul yesterday, my favorite part of the day is this morning show. When the lights come on, it is just the bomb. So you're short right now. You're hovering right above these two moving averages, 50 and 25. Stay patient with this. If you want to short it, wait for an engulfing candlestick like that, a red one. That's yellow, but make it red. And you're going to probably run into support here at $100. So is the juice worth the squeeze? I don't know. Keep an eye on oil and go from there. Guys, smash the like button on your way out. You guys are the bomb. Thanks for coming this morning, and we'll get at it tomorrow. I think I'm gonna talk a little bit about the Nasdaq tomorrow. Maybe we'll pull up a chart and do the same kind of thing. And you guys have a great day. Go make some money. Peace.